What's up, everybody? So, as you can tell in the title, I did lose $337 today, which is fine. It's a good red day. Um, Kind of what we talked about in pre-market analysis is there was no draws to liquidity on the downside. We were looking for these high time frame liquidities, previous day highs, Asia highs, London highs. They were all there, and we didn't quite make it today. But on the opposite end, I did talk about, um, sometimes the market just wants to take a shit, and that's kind of what I thought was going to happen today. These are 30-minute candles, 30 minutes, 30 minutes, 30 minutes. This is an hour and a half in, and still no trade, and I see a huge dump. So we get this 30-minute FVG. What's an FVG? Sometimes people ask me that. I will go over FEGs, IFEGs, Fibonacci retracements, all the technical terms in my 10-part ICT trading series starting tomorrow, one episode a day. So if you're wanting to catch up on what the hell is going on, check those videos out. We get the 30-minute in FEG. I drop down to the 1 minute. I looked for my entry. We get a touch into this 30-minute gap. This is where I'm piqued my interest. I see this 1 minute FEG. I'm very interested, but looking for a strong reversion. And that's exactly what happens. Huge down candle. While these two candles played out about 3 minutes, I did jump on the 5-minute time frame and looked for I looked at the fib. The fib came back. We came and came to the 50% retracement. I was very happy with that. Let me look at the VWAP. VWAP was still a little high. And the 8 EMA was still really high, but we were really dumping. So it was 12:05 in the afternoon. Okay. I was a little skeptical about this, but the setup was just too perfect to not risk it. Which my risk was 1 to 3.8 1 to 3.39 ratio. I couldn't help myself. This was a really good setup, very good inversion, 30-minute gap, 50% retracement. The only thing was, it was 12:05. Volume dies out. If you've been trading for a while, everyone knows that volume dies out between 12 and like 2 o'clock. Like, no one really makes trades. But I've noticed a little pattern over the last 2 weeks, I'd say, that, I see these big moves around between 12 and 12:30. Basically how the trade played out, I thought this was it right here, ready to go and start rolling with that candle. And then again, we're seeing some pressure, seeing some rejection, really feeling, it's going to be a home run today. And then we get a huge candle up. So why didn't I get out just like yesterday? I didn't get out because I wanted to see the trade through. My stop loss was at the swing highs. It was my only trade of the day. I only made one. It was already 12:08. I put my risk assessments in. I did my analysis. I'm willing to see the trade through. And this trade got stopped out. Right there. So that was done at 12:10. You're going to have red days, okay? Everyone's going to have red days. So, I risked how much? 337. Oh, it's gone now. I risked $337 to try to make 3.3 $1,112. So the risk to reward was there, the setup was there, everything was there, the time wasn't there. And let's see this next 30-minute candle. Maybe it played out inverted and then back to the downside. So it was kind of a choppy morning, and I really still think that we're going to take out these hourly lows eventually, probably tomorrow. This is a massive draw on liquidity right here. So again, I did have a red day. Everybody rejoices to see other people lose. I'm normal. I do lose and have red days. It's about how you manage them. Like I said, I have a 10-part series coming out tomorrow, 1 episode a day, going over ICT trading. We do talk about psychology and how to do risk management and how to try to eliminate emotions some point in the series. So stay tuned. Hope everyone had a green day because I had a red one. And see you tomorrow.